All right, let's talk about what's really going on. When crypto prices start to tank, we all do the same thing, right? We stare at the chart, we watch those red candles get longer and longer. But what if I told you the real crash? The weirder and frankly more terrifying story isn't on the chart at all. Nope, it's happening inside the wallet. It all starts with a question that sounds like it's straight out of a heist movie. Seriously, why on earth would a thief steal millions of dollars worth of Bitcoin only to turn around and give it all back? It makes no sense. It goes against the number one rule of, well, thieving. And just when you think you might have some crazy explanation, the story takes another turn. Because 2 hours after the coins are returned, they're gone again. Moved to a totally different, unknown wallet. See, this isn't just a simple robbery. This is someone sending a message. And it's happening at the absolute worst possible time. So to really understand why this one bizarre event is sending shockwaves through the entire system, we need to zoom out a bit. We've got to look at the anatomy of fear that was already squeezing the market, because this little wallet mystery didn't just pop up out of nowhere. It landed right in the middle of a full-blown panic. And here is the first huge clue that something is different this time. While all this is happening, the traditional stock market is fine, kind of upbeat actually. But you look at the crypto market, the needle is buried deep in extreme fear. That disconnect is so important. It tells you this isn't about some global economic issue. This fear is coming from inside the crypto world. And you can see that fear bubbling up everywhere. Take Korea, for example, where Bitcoin dropped below the 100 million won mark. Now, that's not just a number. It's a huge psychological line in the sand. When barriers like that break, it tells you the anxiety is running incredibly deep. But the real damage here isn't just feelings. It's mechanical. In a recent downturn, an absolutely staggering $2.53 billion was liquidated. And let's be clear, that isn't people panicking and choosing to sell. That is the system itself forcing their hands. This is the moment a dip starts to spiral into a disaster. Yeah, we call this a liquidation storm. And the best way to think about it is like a line of dominoes. All that leverage, all that borrowed money in the system, it sets those dominoes up right next to each other. So a small dip in price, that's just the first domino falling. It triggers a forced sale, which pushes the price down even more, which knocks over the next domino and the next, until you have this massive, unstoppable, forced selling stampede. Okay, so we've got a market gripped by a very specific kind of fear, which then gets amplified by this brutal liquidation storm. But a storm that big doesn't just come out of thin air. Something has to trigger it. Something has to shake that fundamental confidence. So what is it? What's the real source of this fear? Well, to figure that out, we're going to have to investigate 3 very different theories. We're going to look at this like detectives. First, is it just a fear that the basic plumbing of crypto is broken? The system itself is failing? Second, is it a fear of something that hasn't even happened yet? A future threat that could break everything? Or third, and this is the most chilling one, what if this isn't about theft at all, but a deliberate power play? Let's go right back to our wallet mystery, because the timeline is everything. So coins are hacked from a government prosecutor's wallet. Wild, I know. Then they're returned. But that 2-hour window, that pause before they're moved again, that is the whole story. A normal thief is trying to get away clean. This is something else. It's like someone is walking up to the system and just tapping on the glass. They're not just trying to steal something. They're asking questions. Hey, are you guys watching? How fast can you react? How much of this so-called decentralized system can you actually freeze? This whole thing suddenly becomes less about the money and more about testing the very security we all rely on. And that leads us perfectly into our second theory, this idea of future breakage risk. The market isn't just reacting to something that broke today. No, it's pricing in the possibility that something fundamental could break tomorrow, a real existential threat. And to understand this, you have to get inside the head of a big institutional investor. Look, these guys can handle price swings. Volatility, they expect it. It's a risk they can tolerate. But you know what they absolutely cannot tolerate? The idea that the basic rules of ownership could change overnight. The fear that the assets they own today might not actually be theirs tomorrow, that is an intolerable risk. So this brings us to our third and, honestly, most unsettling theory. What if we've been looking at this whole thing wrong? What if the person moving these coins isn't a hacker in the traditional sense, but a negotiator, and they're using the blockchain itself as their bargaining table? Think about it. Every single transaction on the blockchain is public, so moving funds isn't just moving funds, it can be a way to send a message to the entire world. And the message this sends, it's a raw display of power. I control this, I can give it back to you, and I can take it away again just as easily. It turns a crime into a public demonstration of control. So when you start putting all these pieces together, the weird wallet movements, the deep institutional fear of rules changing, the idea of power plays on the blockchain, you start to realize they aren't three separate theories. They're all just symptoms of a single deeper problem, a contagion that's spreading fast, and it has nothing to do with price. The real contagion is trust. This is the absolute core of it. The market isn't just saying Bitcoin is worth less money today. It's asking a much, much bigger question. It is fundamentally reevaluating or repricing the reliability and the trustworthiness of the entire crypto ecosystem that is supposed to protect these assets. And suddenly, the questions investors are asking have completely changed. It's no longer just, will the price go up? Now it's, can my exchange actually keep my assets safe? Are the people running these systems competent? Is the whole system a time bomb of leverage waiting to explode? And what other huge risks are out there that we don't even know about yet? All of this leads us to a final, really important distinction we have to make. If the real problem here is a collapse in trust, not just a drop in price, then what do we even call what's happening? Is this just another bear market, another crypto winter that'll eventually end? Or is it something else entirely? And here's the key difference. A normal price crash can heal with good news from the outside world. A good inflation report, lower interest rates, things that bring investors back. But a credibility crash, that's different. Hype and good news don't fix it. The only cure is boring, consistent, uneventful proof that the systems work, day after day after day. So I'll leave you with this final thought to chew on. Are we just watching another cycle, another standard bear market play out? Or are we standing at the beginning of something new and much more dangerous, a trust recession, where the most important asset in this entire space, our fundamental belief in the system itself, is what's really going broke?